This is India's #1 news network, and you're watching News 9. English news as it should be.
Very good morning. You're watching News 9. I'm Karthik Malhotra, and thank you so much for tuning in this Thursday morning. Well, on the show today, we will try and discuss and bring out the facets of Boycott Turkey, what it means for the Turkish and the Azerbaijan economy, and also could there be potential retaliation on Indian visas, both student as well as medical visas. That's a big story that we're tracking for you this morning. Also on the show, defense stocks have zoomed more than 1 lakh crore rupees in market cap addition since the Pahalgam attack and Operation Sindoor that followed. Is this a good time to buy? Feroz Aziz would be joining us on the show to tell you what your investment strategy should be. You're watching Morning Brief at 9. This is Morning Brief at 9. First up, let's bring you all the headlines that we're tracking for you this Thursday morning. The second tranche of the $7 billion IMF bailout for Pakistan, amounting to $1 billion, has been paid out, but IMF is likely to visit Pakistan this weekend on a new mission to discuss the upcoming Pakistan budget. And India's neighborhood is economically challenged after Pakistan. Bangladesh now ups its demand from IMF and the fiscal aid to $4 billion. Boycott Turkey continues to trend on social media. Now, the economic fallout on Turkey's tourism as well as that of Azerbaijan. What are the fallouts potentially for Indians looking at traveling, especially on student and medical visas? We'll bring you that exclusive report. Donald Trump is in the Middle East and has lifted sanctions on Syria. He's also stitched a $200 billion deal for Boeing. We'll bring you those details on the show. India's wholesale price inflation index has slipped to a 13-month low at just 0.85%. Remember, we're seeing deflation in food prices and that of vegetables too. The cabinet has approved a JEWAR semiconductor plant for as much as 3,700 crore rupees, 20,000 jobs to be created. Defense stocks surge and add as much as 1.2 lakh crore rupees in market capitalization since India's operations against Pakistan during Operation Sindoor. Is this a good time to buy? We'll bring you some research and analysis on that. Meanwhile, IREDA has filed bankruptcy application against GENSOL Engineering. Remember, GENSOL was weighed down by SEBI as the investigation is underway on misappropriation of funds. And there's been a rejig in the MSCI index. NYKAA and COROMANDEL International to be added. PAYTM, despite analyst wishes, seems to have missed its entry in the MSCI rejig expected end of this month. Let's start with the top story that we are tracking for you this morning. The International Monetary Fund has distributed a second tranche of over $1 billion to Pakistan. The disbursement of the second tranche comes on a day when the IMF held virtual discussions on Pakistan's upcoming budget as the visit of its mission to Islamabad that got delayed due to security concerns in the country. Now, with this transfer, the total disbursement from the IMF already stands at approximately $2.1 billion. This out of the total $7 billion bailout, which was signed between Pakistan and the global lender last year. Pakistan's government is scheduled to unveil the budget for fiscal 25-26 on June 2nd. The IMF talks will continue until May 16th. Now, to be sure, Pakistan is heavily dependent on the IMF bailout package, which helped to shore up its dwindling reserves. The country got backing of the fund at a critical time last year when it was on the verge of bankruptcy and was saved by the lender by providing $3 billion on a short-term basis. Now, according to the details on the IMF website, Pakistan has received at least 25 bailout loans since becoming a member of the fund. IMF has now appointed a new mission chief to Pakistan, Eva Petrova, a Bulgarian origin staff member, and the mission is now expected to travel to Islamabad over the weekend. Now remember, New Delhi has questioned the efficacy of such bailouts or the lack thereof, given Pakistan's poor track record in implementing reform measures. India has also flagged the possibility of these funds being used for state-sponsored terrorism and said the IMF was exposing itself to reputational risks and making a mockery of global values. As one of the 25 members of the IMF board, India's influence at the fund, however, seems to be limited. It represents only a 4-country group, including Sri Lanka, Bangladesh, as well as Bhutan. Now, unlike the United Nations one country, one vote system, the voting rights of IMF board members are based on the country's economic size and its contributions to the fund. For example, the US has the biggest voting share at 16.5%, while India holds just 2.6%. Besides, IMF rules do not allow for a vote against a proposal. Board members can either vote in favor or abstain, and the decisions are made by consensus of the board. Remember, India had abstained from voting in favor of the bailout for Pakistan. And staying with the International Monetary Fund, it's not just Pakistan. Bangladesh too has now sought an increase of about $762 million from IMF in financial support amid significant macroeconomic challenges, bringing the total financial assistance for the country under various arrangements to about $4.1 billion now. The IMF staff and the Bangladesh authorities have reached a staff-level agreement on the policies needed to complete the combined third and fourth reviews under the Extended Credit Facility or ECF, as well as the Extended Fund Facility EFF and Resilience and Sustainability Facility or RSF. IMF has noted that the Bangladeshi economy remains under pressure from ongoing challenges and rising external financing requirements. Real GDP growth in Bangladesh has slowed to 3.3% year-on-year in the first half of FY25. Inflation, which had approached double digits, has begun to decline and is projected to print around 8.5% by the end of FY25. Now, India's recent strikes on terror camps in Pakistan under Operation Sindoor has sparked criticism from Turkey as well as Azerbaijan, who have backed Pakistan in recent times. Now, this has led to calls across India to boycott Turkish goods and tourism. News 9's Shweta Kothari explains what boycotting Turkey and Azerbaijan could mean for their economies, and should India also expect some retaliation, especially on student and medical visas. Here's a quick explainer.
Now, India's recent military strikes on terror camps in Pakistan under Operation Sindoor have drawn criticism from Turkey and Azerbaijan, both of whom have now sided with Islamabad. Turkey and Azerbaijan openly condemned India's counter-terror operations in Pakistan-occupied Kashmir and extended diplomatic support to Pakistan. Additionally, reports suggest that Pakistan used Turkish-made drones against India, further fueling public anger. Now, following their support for Pakistan, there are calls to boycott Turkish goods, tourism, and they've surfaced everywhere in the country. Indian travelers and online travel platforms have urged a boycott of tourism to these nations. Indian traders too have begun boycotting Turkish products such as apples and marble. Now, social media campaigns using hashtags like Boycott Turkey and India First are urging Indians to avoid visiting these destinations in future. While the move reflects public sentiment, the economic and diplomatic consequences of such a boycott could be significant. Now, let's talk about economic impact. The trade relations between India and Turkey have only grown. India's exports to Turkey stand at $6.65 billion, which is about 1.5% of India's total exports. India imports from Turkey are to the tune of $3.78 billion, which is about 0.5% of India's total imports, which essentially mean there's a trade surplus in India's favor to the tune of $2.87 billion. Let's talk about India and Azerbaijan. Now, India's exports to Azerbaijan is to the tune of $89.67 million, which is a very minuscule to the tune of 0.02% of total exports. India's imports from Azerbaijan are extremely negligible to the tune of $1.93 million. There is a trade surplus with Azerbaijan as well to the tune of $87.74 million in India's favor. A boycott, therefore, would primarily hurt Turkey given its higher trade dependence on India, particularly in marble and apple exports. Now, tourism exchange between the two countries is also at an all-time high. Between India and Turkey, in 2024, about 3.3 lakh Indians visited Turkey, which is a significant markup from 2.87 lakh, about 20.7% increase between 23 and 24. With a total tourism revenue of $61 billion, Indian tourists alone contributed to approximately $291 million, spending on an average of $972 per person. Let's talk about Indian tourists to Azerbaijan now. In 2023, they stood at 1,17,302. In 2024, about 2,43,000 tourists visited Azerbaijan from India, which is a markup, a significant increase of 108% from 23 to 24. With average spending of approximately $1,276 per Indian tourist, contributing to nearly $308 million. A complete travel boycott could deal an estimated $600 million blow to the economies of Turkey and Azerbaijan, which in Indian currency is nearly 5,000 crore rupees. So is tourism boycott a diplomatic win? Well, while the boycott reflects public anger, it may not achieve any strategic objective. Tourism contributes 11% to Turkey's GDP, but Indian travelers account for less than 1% of its total tourism revenue. In case of Azerbaijan, tourism sector is even smaller. So any losses would be marginal in the larger scheme of things. Then there is the risk of retaliation. Turkey could tighten visa norms for Indians, affect students, business travelers, as well as medical tourists in the long run. Azerbaijan may revoke visa-free access, complicating travel for Indian professionals who are working there. So there is the risk of retaliatory travel restrictions. But beyond tourism, there could be diplomatic fallout. There could be broader diplomatic consequences, with Turkey and Azerbaijan deepening their ties with Pakistan, further harming India's geopolitical interests. So instead of a blanket boycott, India could consider quite diplomatic measures to discourage anti-India rhetoric. While the tourism boycott reflects strong public sentiment, its actual impact on Turkey and Azerbaijan may be limited. A more strategic approach, combining measured diplomatic messaging with selective travel advisories, could prove more effective than a full-scale boycott. And while India must stand firm on its national security, it must also ensure that its actions don't isolate potential future allies or restrict its own citizens' travel freedoms.
All right, Shweta Kothari there stating that diplomatic and strategic initiatives as opposed to an outright boycott may be the way forward. Well, moving on now, wholesale price inflation in India dropped to just 0.85% in the month of April as prices of food articles, manufactured products and fuel eased. This as per government data that was released yesterday. Now, WPI-based inflation was 2.05% in the month of March. It was 1.19% in April last year. Food articles saw a deflation of 0.86% in the month of April from an inflation of 1.57% in the previous month, with vegetable prices seeing a sharp drop of about 18.26%. Meanwhile, fuel and power too saw a deflation of 2.18% in the month of April. Now, easing of inflation would create enough room for the Reserve Bank of India to go in for another round of rate cut in the month of June. The June Monetary Policy Committee meet. In April, the RBI had cut the benchmark policy repo rate by 0.25% to 6%. This is the second cut during this calendar year to stimulate the economy facing the threat of US reciprocal tariffs. Meanwhile, the Union Cabinet has approved a 3,700 crore rupees semiconductor plant at JEWAR in Uttar Pradesh to be set up by the HCL Foxconn joint venture. This plant will manufacture display driver chips for mobile phones, laptops as well as automobiles. The plant will have the capacity to handle 20,000 wafers per month, and 3.6 crore chips will be produced at this plant every month. Foxconn is the biggest manufacturer of electronic products, including Apple's iPhone. Electronics and IT Minister Ashwini Vaishnav said this plant will meet 40% of India's total capacity. It will also meet the requirements of Foxconn, which contract manufactures iPhones in India for the rest of the world. The HCL Foxconn joint venture will become operational in the year 2027, and the plant is expected to create employment for about 20,000 people. And with that, we will slip into a very short break right here on Morning Brief at 9. But coming up on the other side, defense stocks have surged and their market capitalization has increased by as much as 1.2 lakh crore rupees. So is this the time to go ahead and consolidate, buy more of those defense stocks in India? Or is this the time to take it easy, since tensions between India and Pakistan seem to have eased, at least for now? Well, Feroz Aziz would be joining us on the other side of the break to help us decode and unpack what defense stocks can do for your portfolio. You're watching Morning Brief at 9.
बेबो का एक ही रूल, रोज खाओ अंडे विदाउट भूल।
समर में एनर्जी हो जाती है कम, खाओ अंडे एनर्जेटिक रहो हरदम। स्ट्रेंथ और पावर मिले हर रोज विद प्रोटीन्स एंड मिनरल्स का डेली डोज। एक्स्ट्रा कूल कूल कूल, यस एक्स्ट्रा कूल कूल कूल, यस एक्स्ट्रा कूल कूल कूल।
संडे हो या मंडे, रोज खाओ अंडे।
For an India that's chasing its dreams, this is the drive of your dreams. Introducing the all-new Skoda Kailak. Own your dream.
Skoda.
How India's drones breached Pakistan's air defense.
The response of the Indian Armed Forces has been restrained and professional.
India responded by countering Pakistani attack.
Pakistan has grossly underestimated India's resolve.
Operation SINDOOR was a massive success and impactful exercise by the government of India.
The reaction of the international community on this particular instance after Pahalgam was to condemn the act.
Pakistan was unable to counter the Indian response.
We have gone about replying that in full force and full intensity.
You're watching Morning Brief at 9. Before we come into the mood check on the Indian markets, let's bring you what happened in the US overnight as stock markets saw slightly higher gains. But the headline really came from Nvidia, as Donald Trump's visit in the Middle East is stitching up deals for semiconductors and artificial intelligence. Let's look at a mood check on Wall Street before we come to Dalal Street.
Wall Street's main indexes ended mixed on Wednesday, with the Dow dropping 0.2%, the S&P 500 gaining 0.1%, and the Nasdaq adding more than 0.7%. Stocks kicked off the week with a sharp rally on Monday and advanced again on Tuesday after the U.S. and China hit pause for 90 days on their fierce tariff dispute. But Brian Crowes, president and lead portfolio manager of Scharf Investments, warns the tariff turmoil could be far from over.
I'd caution investors that overall tariff rates are still roughly 15%. inclusive of the UK and the China deals. We still don't know if those tariffs could go up if deals were to fall apart. But even at the level given this recent announcement, you still have tariffs dramatically higher than where they were last year. So that's still going to be a drag on the economy. It's going to cause higher inflation. And so there's still going to be negative effects from it. It's just that investors are excited that the worst case scenario is off the table.
Investors were watching for more trade developments while President Donald Trump toured the Middle East. Some U.S. tech companies, including NVIDIA, rallied a day after the administration announced AI-related deals in the Middle East. Shares of chip designer Advanced Micro Devices gained more than 4.5% after the company approved a $6 billion share buyback program. Losing ground on Wednesday were shares of American Eagle Outfitters, which sank roughly 6.5% after the apparel company withdrew its annual forecasts, citing tariff-fueled economic uncertainty.
All right, that's the mood on Wall Street. Let's bring you now the mood on Dalal Street. Markets have opened just about 5 minutes back, and it seems to be a little bit of a somber start in trade this morning. Sensex and Nifty both down about 0.2% or so in trade. Nifty 50 holding above the 24,600 mark, while Sensex is just a little over 81,000 points or so. Volatility has increased slightly in early trade, now at about 17.42. Let's quickly bring you the Nifty 50 heat map and make sense of where this pressure seems to be coming from in trade this morning. Well, it seems that Infosys, HDFC Life, ONGC, Sun Pharma, M&M and Maruti, these are some of the stocks which are bringing down the sentiment in trade this morning. Well, we have Feroz Aziz joining us on Morning Brief at night this morning. Feroz, good morning. Thank you so much for taking the time. Help us understand what seems to be slowing down markets and the momentum in growth this morning.
Good morning, Karthik. Like you rightly pointed out, some of these big names, heavyweights, are down. That's why there's some degree of pressure. Like you see, over the last couple of days, especially the Monday, we had one of the largest moves in Nifty. Post that, there was Tuesday, which was a little lackluster. There was about 300 points down on Nifty. One thing which is very, very keenly something an investor or a trader should observe is the 300-point fall. The maximum kinds of short build-up happened in that 300 points. So 50% was the short and long ratio for FII's index futures. Just in 300 points of fall on Tuesday, the short positions went up from 50% to 63%. What am I trying to get to is this fall of Tuesday was driven by derivative, not by cash market selling, which implies the Wednesday's move being stable. What I'm trying to get to is there is a lot of derivative activity which has kept market subdued, not the cash market activity. I would presume that's what is happening today morning as well.
All right, Feroz. I want to now come to you specifically about the MSCI REJIG, Feroz, and there's news that Murugappa Group's Coromandel International Limited as well as FSN e-commerce venture parent company of fashion and beauty retailer NYKAA will be included in the MSCI India Index, which is part of the MSCI Global Standard Index by the end of this month. However, there were expectations that PAYTM, 197 Communication, the parent company of PAYTM, will be included, but that has not made it to the MSCI Index. Now, analysts had predicted that the stock could return to the MSCI Index after it dropped last year. So, number one, what does the MSCI Index really mean and why does this REJIG happen? And number two, what does this mean for these three stocks specifically, NYKAA as well as PAYTM and also the Coromandel International Limited?
Karthik, if you look at MSCI does a REJIG every 3 months. 14th February, starting from Valentine's Day, you can keep adding 3 months, May 14th, and so on August 14th, November 14th. These are the REJIG announcement dates. The applicability of REJIG is on the same month ends. That's point one. Point two, MSCI has several indices. Morgan Stanley runs an index service, which is one of the most popular in the world. For global players, this is as good as Bible in terms of investing, index fund investment. India has two relevant indices. One is the India Index, like you rightly pointed out. There's also the MSCI India Small Cap Index. The last time I checked, the MSCI Small Cap Index had 467 stocks. The Indian fund manager tracks only 250 Indian small cap stocks in the NSE Small Cap 250. And ironically, the foreigner sitting somewhere globally has 467 stocks in the index. So coming back to your point, that MSCI India index is a very important index, point one. Point two, the predictability of that is out in the open. So people already, there are about 8-10 FIIs who already play this theme to preempt what is going to be the change on May 14th, and they build positions.
All right.
So trying to capitalize this move from a short-term perspective for an individual trader is a bad idea, because there are algorithms which predict what is the change, what is the percentage change, what is the demand which will come or supply which will come, and position themselves to take benefit. That's why you see on the May 31st or the last day of this month, you will see the last half an hour, the volumes of these stocks will be enormous. This, if you observe and you go back in history and observe all these announcements, you will see last half an hour volume will be equal to 15 days volume, because a lot of foreigners build that position and hand it over to the index funds in the last half an hour of trade on those dates. So, but it's a very important and a topic for an elaborate discussion at a point in time. So, answer your pointed question, don't try and play this theme because FIIs would have already built, short-term FIIs would have built positions, taking benefit of this already.
All right. And for a one-year scenario, what does this mean specifically for stocks that do get added to the MSCI index and those that do not? So, for example, since PAYTM was dropped last year and PAYTM is not being added this year, there's expected to be little change for PAYTM. But what does it mean for, let's say, over the next one-year horizon for stocks of NYKAA, for example?
Yes, see, I personally think that FIIs who follow an index fund investing are the most stable investors, not even Indian mutual fund investors. They follow MSCI. So I would say a complete free float washout from the market is what you see in these stocks. So NYKAA, if the X amount is the free float, you can work backwards and find out how much index fund investing is being done in MSCI India index, and you will be able to calibrate and figure out what is the portion of free float will be absorbed by these FIIs, and that will go out of the market for good. So to answer your pointed question, Karthik, it's a very, very good news for these stocks. But getting threadbare and understanding what free float will be absorbed by them, and the weightage is where the devil is lying in the detail in terms of weightage. I have not analyzed the weightages. Probably we can subsequently do it in a couple of days. And I'll try and understand what kind of free float will get absorbed by this new weightage, the MSCI India index.
Right. But typically for retail investors holding these particular stocks, and let's just talk about these three stocks that we are flashing on your screens right now, what does it mean for those retail investors? Inclusion in MSCI means there is a higher chance of the volume of trading growing, and hence should they hold on to these stocks? Is it good news that these stocks have been included? And thereby PAYTM not being included, what does that mean for retail investors holding the PAYTM stock?
Karthik, I can't comment on the specific stock, but I can definitely tell you if I was holding any of these stocks, they get included, I would consider this as one of the best news for the stability of the stock.
All right.
Will it result in what kind of price rise? Again, depends on the results and the business and the current shareholding pattern. But is it a great news? One of the best news is you can get in terms of the stability of the stock, if not the move. And if it's not getting included, that's a very bad news.
All right. Well, perfect. Thank you so much, Feroz, for putting that in context, because these headlines make the news every day. MSCI inclusion, MSCI exclusion, not making it, missing it. I think it's important that you've broken it down for the shareholders who are holding these stocks right now. And of course, we'll not pin you to specific stock details. But I want to now shift focus to another sector that we are tracking, Feroz, and this comes by way of defense stocks. And defense stocks, remember, have added as much as 1.2 lakh crore rupees to their market capitalization in 12 trading sessions. Stocks like Hindustan Aeronautics and Bharat Electronics have seen the largest addition in market capitalization terms, while stocks of Garden Reach has been the biggest gainer in percentage terms. I want to understand from you, Feroz, we saw Operation Sindoor, we saw the hostilities from Pakistan and India's retaliation, and some of the homegrown defense equipment auguring really well for the battle that ensued. So specifically defense stocks, that has been a theme which has been fairly volatile all of last year, but it seems that Operation Sindoor has given some sort of a fillip to defense stocks. How should investors view defense stocks from here on?
Yes, Karthik, how would I look at it? Not that I recommend such high beta stocks. From a long-term investing standpoint, it's not that they will not make money. It is that you will not be able to see the light at the end of the tunnel because it's high emotion trade. The problem is not whether the stock will make money in 5 years, 10 years. Will you be able to hold it with this kind of high beta? Most people sell it. If it doubled, people sell it. But if it halved, they hold on for 10 years, waiting for their price to come up. That's what kills the IRR of a direct equity portfolio. Coming back to your point, like you have rightly observed, these are very high beta. So if I was calculating these defense stocks which you listed on an index basis, the beta is almost about 2.4 times that of Nifty. That means they take 140% more risk than Nifty. That's one of the highest beta stocks. So if you have a high beta trade, you should always take it at the trough. And I think that trough was clearly established about 3-4 months back when there were no takers for defensive stocks. HDFC launched its defense sector fund. That was one of the best timing. I would give credits to the second largest AMC to launch it at the right time, make the right amount of money. So to answer your pointed question, if you take high beta, you need to have steel nerves. Point one. If you take high beta, you have to have the courage to buy it at trough. But if you want to take high beta, also look at a mutual fund rather than a direct equity. That will be my take on defense. And I think it is run little ahead because of sentiment. I would say that it has already given the next 1 year return in the last 5, 7, 8 days. And I think it will taper down. And from here on, making 4-5% alpha on Nifty will be a little difficult task for these stocks.
All right. Well, that's the very, very pointed, sharp view coming in from Feroz Aziz that perhaps they have already delivered what they had to, and there could be some correction in coming times. But Feroz, there's a barrage of data which is coming in, not just from India but also from the US, but specifically on India. Inflation numbers have come out really well. Even WPI inflation data that came out yesterday, the April inflation on WPI terms at just 0.85%. Pretty clear-cut signal that RBI is going to go ahead, cut interest rates next month, and not just in the June monetary policy, but as trends suggest right now, at least going forward, we can expect at least a 75 basis point or so cut in repo rate by the RBI. Now, what does all of this mean for the economy, and what do these data points suggest as far as India's stock markets are concerned? Because we are still a large distance away from where we were on the 26th of September last year when Sensex and Nifty were at record highs. So with all this data coming in, more money technically in the hands of consumers, what do you make of, let's say, the next 6 months or so for Indian markets?
Karthik, like you rightly said, inflation has come at a very, very good number. What's heartening to see is there has been a lot of consumption boost from tax reductions. Economic activity has been good, is why you see the highest GST collections in April. You see a 13.7% growth for the last financial year in direct tax collection. In spite of all that, inflation tapering down is a very, very good news. Sometimes what happens is if there's a lot of money in the hands of people, inflation gets pushed up. Of course, CPI is more of food and travel and transport, but still there is always an upward push when you put a lot of money in the hands of a person. There is a blip in terms of inflation up move with a lag of 3-4 months. That didn't happen, which is a great news. Second, inflation has a correlation to everything practically. Like you rightly pointed out, repo could come down. If repo came down, it'll impact the debt markets. In fact, it'll impact the equity markets more than the debt markets because the repo rate is significantly close to the 10-year G-Sec. Anytime a country which has operated in a yield curve which is upward sloping suddenly has a flat yield curve, people don't know what to do. If my dad went to a bank last year, he gets the same rate for a 1-year FD and a 5-year FD. He says, this is not what I'm used to. Give me a 2% more for an FD, which is 5 years. So he's always doing a 1-year FD instead of a 5-year FD. That is making banks' deposit rate becoming so much difficult because every year you have to go to my dad and get a new fixed deposit, which is so much difficult. Once repo comes down, the differential between 1-year FD rates and 5-year FD rates will be apparent to naked eye. So the senior citizens of India who fund the NIM of the country's banking system will be happy to do a 3, 4, 5-year FD rather than a 1-year FD rollover. So repo rate will have a huge impact on the deposit growth of the banking system, and 27% of Nifty is banks. So will it give stability to Nifty? So will it give a push to back to 26,213, which is where it was on 25th of last year, September. I think we are just about 1,500 points away, 700-800 points, 1,700 points, 1,500 points, which is 7-8%. I think this financial year, you should see Nifty back to those levels and a little more, given the kind of conducive raw material we have in the economy.
All right, so that is good news for those who are following the index. But Feroz, you did mention the impact of a repo rate cut on the banking sector, but I also want to draw your attention to the auto sector. And loans getting cheaper is likely to be good news for the auto sector. But auto stocks have been fairly volatile, given that, of course, at one point there are Tata Motors, which has slipped, of course, significantly from its peak. But in addition to that, the entire debate around auto components and their exports to the US, given what Trump has been saying and doing on tariffs, is something which has kept auto stocks also a little on the edge. What is your view for auto stocks specifically, over, let's say, the next 6 months to 1 year horizon, given the volatility in Trump and the fact that we may see rate cuts coming soon?
Yes, Karthik, I think auto is a very, very tricky space today. I was looking at the trade agreement with the UK. Today, to import a car from the UK, it's 100% tariff, 100%, let me repeat it.
Yeah.
Of course, UK does not produce too many brands of cars. They produce high-end brands like Bentleys and the Rolls-Royce.
And the Rolls-Royce, and the Jaguars and the Land Rovers that Tata Motors owns.
Correct. And if that is going to be brought down to 10%, now that's going to be a level playing field. There was a lot of shield to the Indian auto industry, a big shield, right? So a 4 crore Rolls-Royce in the UK is available at 10.5 crores in India with all the taxes. Almost in the luxury segment, it goes to 180%. So will the auto sector get some stiff competition? The answer is yes. And I would stay away from it till this structural change, which can change the way auto industry in India has operated. Till that goes through, I would be circumspect jumping the gun. I'm not saying there's no more money to be made. Of course, there is some degree of that sentiment already priced in. You can make money, but I don't like to gamble. So I would stay away from it.
All right. Feroz Aziz not gambling there on auto stocks, and his recommendation neither should be. Feroz Aziz, always a pleasure having you right here on Newsline. Thank you so much for your time. And before we slip into a break, let's look at some of the global stories that we're tracking for you this morning. US President Donald Trump meets Syrian President Ahmed al-Shara in Saudi Arabia, says US exploring normalizing of ties after lifting all sanctions on Syria. Qatar Airways signs a $200 billion jet deal with Boeing during Trump's visit to Doha, marking largest aircraft order in the company's history. Like we told you, Wall Street has ended mixed as Dow slipped, Nasdaq rose on tech rally amid ongoing tariff concerns and AI deal boost. Tesla to resume China to US component shipments for cybercabs, semi-truck production after US-China tariff truce, ending the pause triggered by Trump's tariff hike. Chinese retailer slash iPhone 16 prices by up to $350 ahead of major shopping festival as Apple struggles with falling sales in its second largest market globally. And staying with China, China and Colombia signed landmark Belt and Road Cooperation Plan in Beijing, marking Colombia's major step towards expanding trade, investment and infrastructure ties with China. US President Donald Trump and Russian President Vladimir Putin to skip historic Moscow-Kyiv peace talks in Istanbul, sending senior officials instead, lowering hopes for major breakthrough as Ukrainian President Zelensky insists on Putin's presence. Luxury apparel brand Burberry to cut 1,700 jobs, about 20% of its global workforce, as part of its CEO's turnaround plan amid challenging luxury market conditions and weaker US spending. Sony beats full-year profit forecast with 16% operating profit jump, shares rise 2%, but warns of $680 million tariff impact from Trump's trade war. These stories on the other side. You're watching Morning Brief at 9.
Will you make a move? The road
Beyond better. The new Tiguan R-Line. Volkswagen.
Currently, the big buzz is AI. I think that's the buzz everywhere. I think if you leverage AI to the objectives you have as a marketing person or a brand or even a category overall, I think it's a very powerful tool, and we are actually working on something which will help bring all natural diamond retailers and support them in marketing, because there are many. So India has about 500,000 jewelry retailers. Okay, out of that, only 5,000 are actually diamond retailers. Now we want to ensure that people who want to get into the business of diamonds have the adequate support to be able to do that, and we can't reach 500,000. So we are actually leveraging AI to help build that kind of marketing support for those people who are interested in getting into the business of diamonds.
What makes a star a superstar? Is it the ability to choose the right script? Or is it about the timing? Are superstars born or made? One man has shown the world that he can't be broken and he won't bend. Allu Arjun, uncut, unplugged, unscripted. Decoding talent beyond borders in conversation with Barun Das.
You're watching Morning Brief at 9. Let's begin with all the international stories that we are tracking for you, and let's start as always with President Donald Trump. US President Donald Trump, after a successful meet with the Saudi Crown Prince, met with Syrian President Ahmed al-Sharaa in Saudi Arabia on Wednesday. The talks follow a crucial US announcement that Washington will lift all sanctions on Syria's Islamist-led government. President Trump used the opportunity to urge al-Sharaa to normalize relations with longtime regional rival Israel.
US President Donald Trump met with Syria's president in Saudi Arabia on Wednesday and said Washington was exploring the normalizing of ties with Damascus.
Cessation of sanctions.
It comes after a surprise announcement the day before that the United States would lift all sanctions on the Islamist-led government. Trump met Ahmed al-Sharaa in the presence of the Saudi Crown Prince Mohammed bin Salman, also known as MBS. He said Turkish President Tayyip Erdogan also joined the meeting virtually.
We are currently exploring normalizing relations with Syria's new government, as you know, beginning with my meeting with President Ahmed al-Sharaa.
At a summit between the US and Gulf Arab countries afterwards, Trump said he was lifting sanctions to give Syria the ability to make a fresh start after decades of iron-fisted rule under former President Bashar al-Assad and his father.
It gives them a chance for greatness. The sanctions were really crippling, very powerful.
According to the White House, the US president also urged Sharaa to normalize ties with Syria's longtime enemy, Israel. The US-brokered Abraham Accords saw the United Arab Emirates, Bahrain and Morocco normalize relations with Israel in 2020. Trump said on Tuesday Saudi Arabia would join the accords in its own time. Talks were halted after the Gaza war erupted, with the kingdom insisting there can be no normalization without Palestinian statehood. US ally Israel has opposed sanctions relief for Syria, but Trump on Tuesday said that MBS and Erdogan, who are both close to the US president, had encouraged him to make the move. Sharaa severed ties with al-Qaeda in 2016, but Israeli officials have continued to call him a jihadist. Israel's government did not immediately respond to requests for comment. The decision is a major boost for Shara, who has been struggling to bring the country under control after toppling Assad in December.
All right, and a major aviation deal was sealed in Doha as Qatar Airways signed an agreement to purchase jets from US manufacturer Boeing. Trump, alongside Qatari Emir Sheikh Tamim bin Hamad Al Thani, witnessed the signing ceremony in Doha and said the deal was worth over $200 billion, covering 160 aircraft. Calling it the largest order of jets in Boeing's history, Trump praised the milestone alongside Boeing CEO Kelly Ortberg and Qatar Airways CEO as well. The deal was signed during Trump's second stop on a tour of Gulf states after he struck a string of deals with Saudi Arabia on May 13th. Listen to what Donald Trump said.
Boeing, that's the largest order of jets in the history of Boeing. That's pretty good. And that's 140. Was that a 140 or 160? Well, yeah, but you're right. It's actually 200, including the 40, so it's over $200 billion. But 160 in terms of the jets, that's fantastic. So that's a record, Kelly, and congratulations to Boeing. Get those planes out there.
Now from Donald Trump pitching major wins for American AI firms to Taiwan's Foxconn slashing its outlook for the year. This week has been packed with major shifts in the fast-moving AI race. Here's a wrap-up of the biggest developments in the global artificial intelligence arena.
From big claims by Donald Trump to Foxconn's cloudy outlook, this is AI Weekly. The U.S. president hit Saudi Arabia, claiming to have rustled up major new investment deals.
With this trip, we're adding over $1 trillion more in terms of investment into our country and buying our products.
Tech giants appear to be among the beneficiaries, with NVIDIA, Qualcomm, and AMD all announcing deals with Saudi AI startup Humane. Deals flowed the other way too, with Saudi firms to invest in U.S. data centers. NVIDIA plans to release a downgraded version of its H20 chip for China in the next 2 months, following U.S. export restrictions on the original model. That's according to 3 sources familiar with the matter that spoke to Reuters. NVIDIA didn't comment, but China is one of its most important markets, accounting for $17 billion in sales last year. Leaders of top tech firms, including OpenAI and Microsoft, say the U.S. needs to invest in infrastructure in a big way if it's to stay in the lead on AI. OpenAI chief Sam Altman was among those to appear before the Senate Commerce Committee. He told lawmakers how industry sees the priorities now.
The need to win in infrastructure, sensible regulation that does not slow us down.
Perplexity AI says it has partnered with payments firm PayPal to enable direct purchases within its chat interface. The deal will strengthen Perplexity's agentic commerce offering, a rapidly growing trend where AI agents not only help consumers with shopping, but also handle transactions for them. And Taiwan giant Foxconn saw its profits leap 91% thanks to the bots. But even as the world's largest contract electronics makers struck an upbeat note about booming demand for its AI servers, it downgraded its full-year outlook. The company cited the recent appreciation of the Taiwan dollar and U.S. tariffs as factors.
And staying with the world of technology, Tesla is reportedly preparing to resume shipments of key components from China to the U.S. for its Cybercab and semi-truck production by end of this month, following the recent US-China tariff truce. Remember, Tesla had earlier paused its shipments after US President Donald Trump had hiked tariffs on Chinese goods to as much as 145%. More details in this report.
Tesla reportedly plans to start shipping components from China to the US for the production of its Cybercab and semi-trucks from the end of this month. That's according to a person with direct knowledge of the situation, and comes after the US and China reached a truce over tariffs. The move is being reported by Reuters for the first time and illustrates how the de-escalation of the trade war is having an immediate impact on business activity. Reuters reported last month that Tesla had suspended plans to ship the components after Donald Trump raised tariffs on Chinese goods to 145%, with the move potentially disrupting Tesla's plan to start mass production of the much-anticipated models. The truce announced on Monday saw the US and China agree to roll back the bulk of tariffs and other countermeasures. The source, however, added that the situation could still change. They cited the Trump administration's unpredictability. Tesla did not immediately respond to a request for comment. Reuters previously reported that Tesla aims to start trial production of the two models in October and mass production in 2026, with the Cybertruck to be produced in Texas and the Semi in Nevada. Trump's tariffs were meant to boost US manufacturing, but they hurt his political ally, Tesla CEO Elon Musk. He repeatedly voiced his support for free trade and objections to tariffs. Last month, Musk told analysts on a first-quarter earnings call that he pushed Trump for lower tariffs.
And staying with trade between US and China, now in a bid to boost sales, Chinese e-commerce giants are slashing prices on Apple's latest iPhone 16 models with discounts of up to $350 apiece. The move comes as Apple's first quarter shipments continue to decline in China, its second largest market globally. The steep price cuts are drawing attention ahead of China's massive 618 shopping festival on June 18th. The annual event for online retailers and brands alike. Take a look.
Chinese e-commerce platforms are offering discounts of up to $351 on Apple's latest iPhone 16 models. It's in an effort to spur sales after first quarter shipments by the US tech giant fell further in its second largest market. The step comes as Chinese online retailers increasingly vie for cost-conscious consumers in a slowing economy. The price cuts are taking centre stage ahead of the annual 618 shopping festival on June the 18th, one of the country's largest. JD.com is one retailer selling the iPhone 16 Pro at a knockdown price, as is Alibaba. Reuters was unable to ascertain if the discounts were being offered by Apple itself or the platforms. Selective discounting has featured in the company's China pricing strategy. The US tech giant's smartphone shipments in China dropped 9% in the first quarter, while domestic competitors Xiaomi and Huawei posted gains of 40% and 10% respectively. Smartphones are among the key targets of China's broader consumption stimulus plan, with local governments in major cities offering subsidies of up to 500 yuan or around $70 for some handsets.
China and Colombia have taken a major step in deepening their ties, signing a joint cooperation plan under Beijing's Belt and Road Initiative, or BRI. The agreement was reached during a high-level meeting in Beijing between Chinese President Xi Jinping and Colombian President Gustavo Petro. Colombia's foreign minister called it the country's boldest step in decades, saying the pact opens the door to expand trade, investment and tourism, with China already Colombia's second largest trading partner and now its top source of imports. The move signifies Bogota's growing economic shift towards Beijing at a time when the US remains cautious of China's rising influence in Latin America. And what was shaping up to be a major diplomatic moment may now fall flat, with both US President Donald Trump and Russia's Vladimir Putin not attending the first direct peace talks between Moscow and Kyiv in 3 years. Putin had proposed the meeting for Thursday in Istanbul without preconditions. Senior officials, including advisor Vladimir Medinsky and Deputy Defense Minister Alexander Fomin, will represent Russia in the talks. Meanwhile, some US officials confirmed that Donald Trump will also stay away from the talks in Istanbul just days after hinting that he might attend it. But earlier, Ukraine President Volodymyr Zelensky called for a one-on-one meeting with Vladimir Putin, saying only the Russian leader has the authority to approve a ceasefire. Listen in.
Будемо чекати на зустріч з Путіним.
We will wait for the meeting with Putin in Turkey in order to prevent any Russian manipulation over cities and to prevent them from saying that Putin is not ready to come to Ankara, but only to Istanbul. I want to say, if Putin flies to Istanbul and not to the capital, I've already sent a signal to President Erdogan, and the Turkish side are ready for President Erdogan and myself to fly to Istanbul. In any case, we will do everything possible to make sure this meeting happens. If Putin is ready to meet, not only for media purposes but in real life, then on the level of leaders we will do everything to agree on a ceasefire. Because I must reach a deal about a ceasefire with him, because he is the only person who can decide.
Саме з ним я повинен домовлятись про припинення вогню, бо тільки він це вирішує.
Well, that's all we have for you on this edition of Morning Brief at 9. Thank you so much for watching. I'll see you again tomorrow, but news continues right here, so stay tuned to News 9.
For an India that's chasing its dreams, this is the drive of your dreams. Introducing the all-new Skoda Kailak. Own your dream.